Hey guys, what's up? It's Ace Trader coming to you Saturday, April 13th, 2019, 3:16 p.m. What a gorgeous day here in California. We're just having amazing weather on the West Coast. I hope wherever you guys are at, you're having great weather too and you're having a great day. I'm so happy to be coming back to you guys creating this video. I got to apologize. I know it's been a little while since I've created a video, but everything with life and trading, of course, every day, and everything's just been keeping me so busy. But I did want to come back to you with an amazing video, something that'll help you guys in your trading, and I think this is it. I'm going to share with you another indicator that I use. So this will be another video in the indicator series that I started with the MACD. But this indicator is one that I use every day on every time frame, and it has been a game changer in my trading ever since I started using it. And once again, I do use it for scalping, for swing trading, for position trading, and also for my long-term investment portfolios and accounts. That indicator is the Bollinger Bands, as you see here on the chart, okay? Real quick, Bollinger Bands were created by a gentleman named John Bollinger. And for the sake of this video, to keep it, as short as possible, I'm not going to go into a lot of history about the Bollinger Bands. It was created by John Bollinger. I'm not going to go into a lot of the calculations or the math behind it, except to tell you guys that what makes up the Bollinger Bands, pretty simply, is a upper band, a middle line, and a lower band, okay? The middle line is the 20 simple moving average, and the bands hold two standard deviations between the upper band and the lower band, okay? Those are the out of the box settings. You can change the settings in Thinkorswim. You could come over here and you can go to Bollinger Bands. You could change the period simple moving average. You could change the standard deviations on either band. You could even change it to an exponential, a weighted, a whole. I use the out-of-the-box settings. To me, there's no reason to change any of that, and most traders I know that use this indicator, and a lot of them do, professionals as well as retail traders use Bollinger Bands. I think almost everybody I've ever talked to uses the standard settings. I think I've met a couple people who change them, but most people use the standard settings. I do. It's been highly successful in my trading. So for the sake of this video, we will use the out-of-the-box settings. The Bollinger Bands, as you can see, once again, two standard deviations. These Bollinger Bands, they will change as volatility increases. As you can see here in this drop down, the bands expanded. You have all this room here. And they'll also decrease when volatility is quiet or there's not a lot of volatility, like right here. So you can tell there's a big difference between those two there, okay? The Bollinger Bands can also be used to identify and determine the strength of a trade. So like in this down move, as this is falling down, these Bollinger Bands spread out wide. That's showing you that there's a lot of volatility and a lot of strength in this downward move, okay? Versus if we look at something like right here, where the Bollinger Bands are much tighter here, or even back over here where they're tighter, the moves are not as extreme. They're much smaller. So once again, Bollinger Bands can be used to identify how strong is this trend. Is it as strong as this trend here? It's way stronger than this trend. Is it as strong as, let's say, this trend that moved up? No, this is way stronger, and it can be seen by the expansion of the Bollinger Bands, okay? The Bollinger Bands, can be used with a variety of different trade strategies or trade setups, and that's really the meat and potatoes of this video I wanted to get in, is how do you use these squiggly lines to help make you money, okay? Well, there's four major trading strategies that we're going to discuss. One is called the inside band trading, which to me is consolidation trading. The second strategy is the pullback to the middle, or the pullback to the mean, if you will. That's a trend trading strategy that can be used with the Bollinger Bands. The third one is going to be called walking the bands, which is volatility trading, and the last one we're going to discuss is called Bollinger Band reversals, okay, which is mean reversion trading, if you will, I guess, to a certain extent. So let's start with inside band trading. I'm going to go ahead and head over real quick to a chart that will show us how to trade inside the bands. So I'm going to go ahead and kind of zoom us in here. I'm going to move us back over here, okay? And here in Southwest Airlines, you can see that we went ahead and we had this area here that had a lot of consolidation. But funny enough, the price, because it stays within the bands, just so you know, about 90% of price action does stay within the bands. We're able to trade the bands back and forth and make some money. So for example, here we went ahead and price came and bounced off the band here, as you can see. And let me just make a so right here, price went below the band, and once again, 90% of price action stays between the bands, so you have this little bottoming tail. And then the very next day, you got a couple of dojis, and then you got this pop up here, okay? And price started moving up. So you could have traded the bands, taken this trade and moved up and taken it to, actually, you know what? Let me clear this because I don't want to, let me just do it like this here. You could have taken this trade up here, okay? And then once you saw the Bollinger Band, once you saw price pop outside the Bollinger Band right here, this was telling you, hey, price could go ahead and reverse back down, and which it did, and you could go ahead and look to take a trade all the way back down to this band here, where you can see it stopped, and then once again, it made another trade back up. So this is literally what's called trading inside of the Bollinger Bands. Let's go ahead and look at another example here real quick. We'll go ahead and look at, how about Home Depot? I think Home Depot has some good examples. Oh yeah, this has great examples of trading inside of the band. So once again, price goes ahead and comes up. The minute price gets outside the Bollinger Band, it literally can be considered almost like an overbought signal. Once again, I'm going to keep repeating this like a broken record. Price will go ahead and stay within the Bollinger Bands about 90% of the time. So whenever you get a move where you start seeing these candles and price printing outside of the Bollinger Band, just know, be really careful. Like if you were in this trade, let's say you got in here at this breakout and you took this trade, let's just say right here. Let's say you just took this trade. I'm just going to put that as a line. And you took this trade here, and you're in this trade, and you're noticing prices printing like this going up the Bollinger Band. Just that's great to be in the trade. And I'm not saying to get out, but be aware that you may get 2, 3, 4 bars that pop up, and eventually this is going to have to go back into the bands because, as I said, price action is kept within the bands about 90% of the time. And as you can see, price did go back into the bands, okay? So it consolidated here, as you can see, and so we had a little bit of consolidation right here, and then price began to break down, and price broke down, and we could have taken a trade maybe at the break here and taken the trade and gotten out as soon as price touched this bottom Bollinger Band. And then as soon as we saw another break to the upside, let's say it got above the 20 moving average here, if you wanted to be conservative, you could have went ahead and you could have taken that trade from here, and you could have ridden it up here. Now, once again, we're outside the Bollinger Bands. What's that telling you? Price is probably going to start reversing because 90% of price action has to stay within the Bollinger Bands. And what did we see? We started to see price come over. Me personally, I probably would have went ahead and said, okay, if price breaks this here, that's kind of interesting. Let's do this. Okay. So I'm going to erase this here real quick and say if price would have broken down here, sorry guys, for some reason my drawing tools are not working with me. Okay, so if price would have broken this line here, then I would have been very comfortable going ahead and, because once again, price came up, went outside the Bollinger Bands, started coming back down, and the minute it broke through this line here, because it went underneath this last pretty good size wide range bar, I would have been okay taking the trade and taking that trade and going down again to the bottom of the band, okay? Look at this one here. This is another good example of trading inside the bands. Once again, price went outside the bands. What does that mean? Well, price is probably going to reverse because it's outside the bands, and it did. And it started reversing, and it went to the upside. And it's interesting because the minute it gets to the other band on top here, what does it do? It retraces, okay? So That is just a couple of examples of trading inside the bands. Very easy to do. And this is a daily chart. I mean, you can get some good moves. You're talking, if you would have taken this trade, what is that? Like $201, let's say. And at the bottom of this band, what is that? That's $192.50. So, I mean, what is that? That's $8 move, $7.50 move in a matter of 7 days. That's pretty cool, you know. And so once again, this is a great trading strategy for using the Bollinger Bands. Is trading inside of the band. Okay. One last example on this one, and then we're going to move on to a different trading strategy. Let's take a look at good old IBM. And let's see here. IBM. Just zoom out and let's take a look here. Okay, so once again, trading inside of the bands, price comes up here, it peaks out of the Bollinger Bands, and we get this price move down. And price goes outside of the Bollinger Bands here. 90% of price has to be contained, so we can look to take a trade up. Personally, I would wait for price to break right around here. And I'd take that trade. I'd take that trade. Look at that. That's beautiful. You just take that trade from here and you take it right up to the top band. I would be out right here. And I mean, that's a nice little move. What is that? That's about 144 to like 148 or 147 or so. I mean, that's a great little move there, you know. Same thing here, you know, price got outside of the Bollinger Band right here, and we were able to go ahead and take a trade and take it down to the Bollinger Band, to the bottom Bollinger Band. So literally, you're just trading a bounce of the bands. That's, if you're taking notes, just put that in your notes. You are trading a bounce of the bands back and forth. That's the beautiful thing about this. You're just going boom, 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 and then here it starts consolidating. You probably wouldn't want to get involved there, but those are nice, and you can make some good money trading that strategy. So, okay, that was the first strategy, inside band trading. The second strategy we're going to cover is called pullback to the middle, or what I like to call trend trading. Okay, so we're going to go ahead and look at WDC, Western Digital, one of my faves. And this is a great example of how Bollinger Bands can just keep you right in the trend for a long period of time. So as you can see, WDC's been in this big old downtrend, okay? And when we're looking at trading the pullback to the middle, that's literally what we want to do. We want to trade, and we want to be able to get out of the trade as soon as we make some good profit. So for example, here, the price gets under the 20. Okay, now the way I like to trade this is when price is under the 20, I'm bearish. When price is over the 20, I'm bullish. Okay, when price is like it is here, there's no need for me to get out of this trade. I mean, for that entire period, because even though it goes down, and yes, it pulls up to the 20, you could see right here, price got a little bit outside the Bollinger Band, went back up to the 20, came down, got outside the Bollinger Band, went back up to the 20, kind of got a little consolidated, and here we're getting very tight on the Bollinger Bands. But it never goes anywhere near the upper band here at all. So I mean, it's a very bullish observation to me when I look at this. And price goes down again. It goes outside the bands. It pops back up to the 20. And then look at this. We get this flush all the way down. And in this entire move, there would be no reason to get out. I mean, quite honestly, if I was looking for a place where maybe I would exit, and this is, like I said, trading back to the middle. So technically, let me show you where your exit points would have been. You would have came down here, and you would have went ahead and gotten out right here on this candle. You would have gotten out, let's say here. You would have re-entered here. You would have probably rode this out, and probably would have gotten out maybe, oh, I don't know, this one's a little tough. Probably, I mean, technically, you probably could have gotten out here. Let this happen here. probably waited until, because this is really a lot of consolidation, but right here on this candle getting back underneath the 20, then you could have gone held. Once again, this got outside the Bollinger Band, fell down again, popped up. You could have gotten out here technically by strategy, and then looked to get back in at a break of this candle right here. And then you get this flush going down, and the flush is great. And literally, I wouldn't have gotten out anywhere here. It's so far below the 20. I mean, if you look at this, this price action is so far below the 20. There's no reason to get out of this trade. I mean, and you're talking from 723. Geez, I mean, it never even got outside the band, so there was no need to exit, except for like right here you're flushing, and still there's no reason to get out, because even though you're under the bands, price is not going, it's not printing any kind of bullish bars getting even back above the band until here. So literally my exit point would have been somewhere like in this area. Granted, these are, by the way, support and resistance levels that are that I'm watching on this particular stock. We're looking back into the past, obviously, but I would have gotten out around probably right in this area right here. I think like on this, when this bar started printing, I would have been getting out. And I'm going to erase this real quick and go with my arrow pointer. I would have gotten out right at the beginning of this green bar printing up. Probably the minute it got about halfway through this bar here, I would have been out. And once again, it popped up. It never ever again got really close to this upper band. This 20, I'm going to say it again. If price is below this 20, you're good for shorting. If it's above the 20, you're good for going long. Okay. But anyways, that's a little bit of an example of really trading back to the 20. Back to that moving average. Let me see if I can go ahead and throw another example that may be a little bit better, because that one was a pretty tight stock. This is a good example. Sure, why not? Okay, let's look at this. So we're talking about, once again, trading a pullback to the middle. So we're trading the pullback to the 20. Okay, so here we go. We're going up, we're rising, we're in this trade, we're bullish, and then we hit the upper band, so we get out. So now we're out of the trade up in here, and it pulls back, and it's right on the 20 right here, and we're waiting. So it goes down under the 20, starts to come back up, and boom, it breaks out over this area right here, and we can maybe look to get a little long here. Then it goes back. Now this one goes all the way down to the lower band, so here we would want to wait, if we were bullish, for price to come back up above the 20. It gaps up, and then look at this, it literally stays above the 20 moving average. I'm going to actually erase that and go like this. It stays above the 20 moving average, price stays above it. It never gets below the 20. There is a lot of people that will just trade this, and they'll hold the whole position until it breaks the 20, because it's in the upper 50% of the Bollinger Band range. So there's no reason to get out. It's above the 20. It's in the upper 50% of the Bollinger Band. And once again, if you did want to be conservative and get out, you could have taken this move up, and then you're out right, let's say around here. Let's say you get out on this candle, and then you go ahead and you have price, and price retraces, comes down, hits the 20, and then the minute it would go ahead and break over right here, the minute it would break over this area, boom, you're back in the trade, and you're literally entering the trade right here, and now you're riding it up for the second leg. That is trading the pullback to the 20, literally. That is, up, pull back to the 20, up again. And that's a trading, trading to the middle, pulling back to the middle. And once again, if we look at it on this side, guys, same thing. Let's say we take the trade down, and where's the pullback? Pullback's here. Pullback's going to the 20, then we're going down again. Then here's the pullback up to the 20, and then we flush down again. And look at this pullback. This pullback doesn't even get to the 20. Look at how far away that is from the 20. That is super far away. I mean, I wouldn't even get out on this pullback. I'd be hanging out, because I mean, look at how much room there is. that is within like probably the bottom 20% of the bottom Bollinger Band. It's in like the 20% of the bottom range of the Bollinger Band. Super bearish going all the way through here. Look at this, all the way through here, super bearish. There's just really just moving it over here so we could see a little bit better. Yeah, there's really no need to get out of that trade at all. I mean, it's just beautiful all the way down, you know. And you do get this little bit of a pullback right here to the 20, but once again, a lot of traders, once they're in this trade, unless it's closing above the 20, they're staying short. And same thing here. Look at this, long. They're above, you know, you get above the 20 and you're below the upper Bollinger Band and you're just riding this all the way up. And then boom, you pop out of the upper Bollinger Band. Notice this here. This is important to take notice of. You're outside the band. Once again, what happens, as I was saying, price action has to return inside the band, and even though it's still going up, what happens? It goes up, but it goes into the band. Okay, and then of course it goes and it reverses back to the mean. So anyways, I hope that you guys found pretty darn interesting. Let's go ahead and discuss the third trading strategy. This is called walking the bands. This is volatility trading with Bollinger Bands. And the first one we're going to look at, actually we're already on it, we're going to look at Roku. Roku, great examples of walking the bands. And so once you're in a trade and that trade is trending strong with the volatility expansion, you're going to see price literally walk on top of these bands. And here is the example that I'm talking about. Perfect, is right here. This right here. Price is literally walking the band. It is literally walking this Bollinger Band straight down. That, and then if you notice, you've got the Bollinger Bands themselves. What are they doing? They are increasing. So you have the Bollinger Bands increasing as price is going down, and it's walking the Bollinger Bands. That's volatility trading to it's to its umpteen degree, to its pure definition. That is volatility trading. It's awesome. Let's look at another example of that real quick. How about Qualcomm? Let's see here. Here we go. Let's see. Bollinger Band walking. Here's another great example of it. Look at this. This is very cool. So we're in this trade. Everything's going great. There would be no reason to get out here. Okay. But then it starts walking the Bollinger Band. Literally, all this. It's walking the Bollinger Band. It's just going up, 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 up. So I've got some pullbacks here, but you can see price is walking here. The other example was a little bit better than this one, to be quite honest with you. But let me see if we can find. Here's a little bit of a walking of the Bollinger Band we can look at. Would be right here. You know, you have this kind of consolidation. It breaks down. Let me just get my pointer here. So you have this consolidation right here, where it's consolidating. It's moving sideways. You get this breakdown here, and then right here, look at that Bollinger Band walk. That's cool. 1, 2, 3, 4, 5, 6 days of pure volatility downside trading. And remember, what happens when volatility increases in the stock price? The Bollinger Bands, they expand. And that's how you can tell when volatility is in there. When they're tighter like this, the volatility is less. So very cool stuff. I hope you guys are picking up on this. And let's see, I'm going to see if I have one or two more examples real quick, and then we'll move on. JP Morgan, yes. Here's another great example of the volatility of walking the bands and volatility trading. Is look at this. Look at this right here. That is awesome. That is so awesome. Look at that. It's just price is just going right down, 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 down. So, you know, once again, when you get these moves and you see that price is walking the band, walking the band, walking the band, and you're getting this band expansion, you know that there's a lot of volatility in this move. When these bands expand and you see that price walking the Bollinger Band, man, there's no reason to get out of the trade. And then on top of that, look once again, look at your distance between the 20. I mean, there's a ton of room here. You know, actually, I'm even going to demonstrate it in a better way. Look at this. Look at that room. Come on, work with me here. There we go. Look at all that open room. Look at all this empty room right here. I mean, it's just amazing to see all of that room that is available between price and the 20. There we go. That's a good way to show it. Sorry, guys. You all this empty room. That's showing you that, okay, we have the bands expanding. We have a ton of room between price and the 20. Price is walking the Bollinger Band. I wouldn't even get out of this trade. And literally, we had one green candle from, what is that, December 3rd to like probably December 12th or something like that. We had one tiny little green long upper tail doji candle, and everything else was just bearish. So, all right, cool. Let's go ahead and move on. Hope you guys like that one. I think that that's one of my favorite Bollinger Band trading strategies, to be honest with you. One more quick example, because this one's really good too, of walking the bands, just so you guys, we solidify it, drive the point home. Right here, there's no reason to get out of this trade all the way here. You know, once again, you do get this little bit of a pullback towards the 20, but you still have a ton of room below the 20, price below the 20. I would never even get out here. I just wouldn't. It's just, it's kind of almost like a bear flag, and those are really hard to see because of the arrows. Let me use a line. It's pretty much like a bear flag going on right here. So it's going down, kind of get, or maybe even more like a bearish continuation pattern here. But when you go down and you flush again, and then look at this, it literally barely even pulls back here. Sorry, I meant for that to be an arrow. Barely even pulls back here, here, and then all of a sudden you get the Bollinger Band walk. Starting right here, it starts walking the Bollinger Bands all the way down. That's just such a sweet trade. That's awesome. And once again, Bollinger Bands are really pointing the way to where price is going. As long as price is below this 20 simple moving average and it's in the bottom 20 to 30% of the Bollinger Band range, there's no reason to get out of this trade. And if you look at the bands themselves, look at that. They're just curving down. So they're telling you exactly what's going on, and it's basically stay bearish and enjoy your money. So okay, last trading strategy, and I apologize, I know the video is getting a little long, but I hope you guys are getting along out of this and getting a lot out of this, is the Bollinger Band reversals. This is basically where we're going to go ahead and look to take trades from one extreme to the other on the Bollinger Bands. And so let's go ahead and take a look at, how about HES? Okay, so this is a great example of Bollinger Band reversal trading right in here, okay? And basically what does that mean? Is that means we are trading the extreme. So let's look at the extremes here. Well, here's an extreme. Here's an extreme. That's kind of a little bit of an extreme here. Here's a little bit of an extreme here. And really what we're looking to do is we're looking to trade each side of the band. So for example, we come in here, price moves up, okay, and we get this, you know, like I said, you can consider overbought when price peaks outside the bands because, once again, 90% of price has to stay within the bands. So we could go ahead and look to literally take a trade from here down here. It reaches, I like it when it hits the band, but even if it doesn't hit the band, you come down here, you get this candle, it gaps down, does like a bear gap trap and starts moving up. You know, even if you didn't get out here with the gap up here, you definitely would have gotten out. So, I mean, you would have made some good money. From here down here, you're looking at what? 66.10 to maybe 61 bucks, $5 move in a matter of what? 1, 2, 3, 4, 5, 6 days. Not bad. You got a little bit of chop going on in here. Kind of choppy here, so I wouldn't do anything here, okay? But then look what happens. You get up above the 20, pulls back, pops, pulls back. This is a little tough to trade too. I wouldn't be trading any of this, to be honest with you, but I would be looking at this. This, when I see these extreme levels, this is where I'm like, okay, I'm wanting to see what the next candle does, because if it does exactly what this did, which is where it gaps down and then starts printing lower, I would be in this trade. and I would take this trade from here and I would write it all the way down to here. Okay, I would write it down, actually take that back. I would literally write it down to this candle here, and I would be getting out. I'd be getting out probably on this doji. But that's still a really good move. You got 4-day move. You got this extreme level telling you, hey, price is way out. Price is outside the 2 standard deviation. Something's got to happen, and something did happen, and you were able to take that trade right in here and take it down and get out right here on this green doji, most likely. Okay. Once again, we have another price extreme movement outside of the Bollinger Bands right here, and we wait and we see what the next day does, which is right here. Gaps down, we're like, cool, we're in the trade. We take the trade down, and we're probably, we might get out on this doji, although I probably wouldn't, and I'll tell you why. Because even on this doji here, price, it never broke 50% of this long, wide-ranged bodied red candle. So why get out? It's still underneath the 20. I'd probably stay in and see it down here. Now, once it reached down here, keep in mind, we're at extreme levels again. So I'd be like, okay, time to get the hell out of Dodge because we're way down here. And I would exit, but I would also say, okay, well, I'm going to look and see if we can get a trade going back to the other band, to the other side. And sure enough, we do. It breaks this right here. Boom, goes right up and gets to the other band, and then what happens is like clockwork, price peaks outside the band, so it's at the extreme level, and then once again you can take the trade and take it down to this band. So it's really, really cool that you could literally come in here and go boom to boom, here to there, here to there, and it's very easy. I shouldn't say very easy, but it's very easy to see that you can trade either side of the band this way. Okay. So those are kind of some of the trading strategies of Bollinger Bands. I'm going to do another video on how to do trade squeezes, where you actually get Bollinger Band squeezes and then you can trade volatility on them. I was going to do that in this video, but this video is already 31 minutes, so I'm going to end it here. I hope you guys enjoyed this video. If you did, please give the video a like. If you have any questions, throw them in the comments. I'll be happy to answer them. Please be sure to subscribe to my channel, and I'll definitely catch you guys in the next video, okay? Take care.